Assalamualaikum warahmatullahi wabarakatuh. My name is Hanira Sabrina binti Nur Syamsul Syafari and I am the Head Accounting Department of the Sinaran Dewi Energy Berhad Company.
Hi, my name is Nur Aliba binti Asbullah as the Accounting Manager in Sinaran Dewi Energy Berhad Company.
Assalamualaikum and good day everyone. My name is Nur Darwisha binti Azmi and I am now employed as a senior accountant for Sinaran Dewi Energy Berhad, where I have been working for 9 months. My experience in accounting is already 5 years. Without wasting more time, I will pass this presentation to the Head of Accounting Department, Ms. Hani, to start the presentation.
The company background: Sinaran Dewi Energy Berhad, or also known as SDEB, is an upstream player in the oil and gas industry, providing an entire value chain of exploration, development, production, rejuvenation, and decommissioning services. The Malaysian company was born out of a merger between Dewi Petroleum and Sinaran Petroleum in 2011 and is headquartered in Kuala Lumpur, Malaysia. Two of its major shareholders are President and Group CEO Datuk Farid Hussein and Vice Chairman Datin Bin Abdullah, who both managed Dewi Crest and Sinaran Petroleum before the merger. Sinaran Dewi Energy Berhad core businesses are divided into investment holding, offshore construction and subsea services, or also known as OCSS, fabrication, hookup and commissioning, and drilling and energy services. OCSS involved the construction of offshore platforms and marine pipelines for oil exploration, which are supported by huge support vessels. OCSS contributes most in revenue to the group at over 40%. The group has a presence in over 20 countries and a workforce of 12,000 people. The firm operates through the following segments, which is investment holding, engineering and construction, operations and maintenance, drilling, exploration and production, and corporates. Its services include offshore construction and installation, brownfield rejuvenation, subsea services, offshore support vessels, tender assist rigs, and semi-tender rigs.
I will present the management approach from the perspective of factors to consider to have segment reporting. They consist of nature of the business activities, existence of managers responsible for activities, and information presented to the board of directors. Without further ado, looking at the first factor, it is determined by any activity carried out by an entity with the main objective of profit maximization. For the second factor, each segment manager is responsible for ensuring the performance of the segment and report directly to the Chief of Decision Making in order to make a decision about allocation of resources and performance evaluation. In Sinaran Dewi Energy Berhad, there will be top management to manage each segment business activities. For third factor, the Chief of Decision Making must refer to the Board of Directors report since it contains reliable information about the entity overall performance. The information is important so that Board of Directors can make a decision either to continue, discontinue, or replace the segment with better new segment that can provide more earnings to the company. Looking back at the nature of business activities, these four factors must be taken into consideration. For the nature of the products and services, Sinaran Dewi Energy Berhad engaged in the provision of oil and gas services and solution as well as investment holding. It organized its business activities into 5 major segments, which are investment holding, engineering and construction, drilling, exploration and production, and corporate, in which each segment is offering different products and services to its customers. For the nature of the production processes, each segments have their own activities to satisfy customer wants, such as in investment holding segments, Sinaran Dewi Energy Berhad use their property and buildings in Shah Alam and Seri Kembangan for rental. In engineering and construction segments, Sinaran Dewi Energy Berhad constructs an installation of offshore platforms, marine pipelines, and subsea service under the OCSS activity. It is also involved in repairs and refurbishment of industrial gas turbines, supply, installation, commissioning and maintenance of point-of-sale system, for petrol stations and asset management services for offshore installation. In drilling segments, Sinaran Dewi Energy Berhad is involved in the charter of all drilling rigs and provision of drilling-related services. In exploration and production segments, Sinaran Dewi Energy Berhad demonstrated its capability through an outstanding exploration track record, speed to monetize discoveries, innovative and cost-efficient solution, and excellent safety performance. Lastly, in corporate segments, Sinaran Dewi Energy Berhad covers the non-operating activities. It comprises the holdings and treasury organization, including its self-insuring activities as well as its headquarters and central functions. Next, for the types of class of customers for the products or services, it is provided varies from customers to customers. For exploration and production segment, the target customer depends on the satisfaction of the product produced to the customers. Meanwhile, for investment holding, engineering and construction and drilling segments, the target customer depends on satisfaction of the services provided to the customers. Lastly, for the method used to distributed product and services depends on the type of product and services rendered. This can be concluded that Sinaran Dewi Energy Berhad will anticipate the customer's needs and preferences and offer the products based on the client's requirement. Sinaran Dewi Energy Berhad has two types of segment, which are operating segment and geographical segment. Operating segment is an entity that has discrete financial information available and whose results are reviewed regularly by the entity's chief operating decision maker for purpose of performance assessment and resource allocation. As for Sinaran Dewi Energy Berhad, the operating segment comprises investment holdings, engineering and construction, drilling, exploration and production, and corporate. Next, geographical segment. Geographical segment is unit of an entity engaged in providing products and services within a particular economic environment. For geographical segment, it comprises a few countries like Malaysia, Asia, Turkey, Australia, Americas, and Middle East, as well as Africa. Other operations of the group include provision of advanced subsea and floating systems, engineering, and project management services to offshore projects. Next, we proceed to the Chief of Decision Making and its responsibility. Referring to the Sinaran Dewi Energy Berhad's annual report, it concluded that Dato' Azmi Uthman, who is the Managing Director, is the Chief of Decision Making of the company. The responsibilities of the Managing Director includes overall responsibilities over the operating units, organizational effectiveness, and implementation of board's policies and decision. The Chief of Decision Making of Sinaran Dewi Energy Berhad should identify the nature of business as both production and services, and also the existence of manager responsible for the business activities. The information gained by Chief of Decision Making will be reported to the Board of Directors.
Next, for the segmental reporting part. In this part, the operating segment will be analyzed using a quantitative 10% threshold test to categorize them into reportable and non-reportable segments. There are three techniques to recognize them. First one is revenue, second is profit or loss, and the third one is assets. Following that, the entity's total external revenue will be used to evaluate all reportable categories against the 75% total revenue criteria. External revenue from selected operational segment must be equal or exceed the 75% of the entity's total external revenue. Now we're moving forward for the 10% threshold test. Our company, Sdeb, is required to disclose information about a segment separately if it meets segment revenue, which is the revenue, including all the inter-segment revenue, must be more than the 10% of the combined revenue of all operating segments. According to the table shows, you guys can see among the 6 segments that we have, 4 of them are reportable, while 2 of them are not reportable. The reportable segments are investment, engineering and construction, drilling, exploration and production. This is because they all satisfy the 10% revenue test. However, for corporate and others, since they are not satisfying the 10% threshold test, they are categorized as non-reportable segments. Now, for the 75% threshold test. In order to make sure that all the reportable segments are included, a 75% threshold test must be conducted. Combined external revenue of identified operating segment must be more than the 75% of the total external revenue of the entity. If the total external revenue reported by operating segment is less than the 75% of the entity's total revenue, additional operating segment must be identified as reportable segment at least until 75% of the entity's total revenue is included in the reportable segments. Next, I will be showing you guys on how to calculate the percentage for the 75% threshold test. There are 3 steps. The first one is total external revenue reportable. For the total external revenue reportable, for the highlighted amount which is green, purple, blue and red, that is the external revenue for each reportable segment, which are investment, engineering and construction, drilling, and exploration and production. After I have summed up all the total external revenue reportable, we get 216,254,000 ringgit. For the second step, which is the total external revenue, it's very easy because the amount is from the previous table, which is 239,793,405 ringgit. And next, for the percentage computation, the total external revenue reportable will be divided by the total external revenue and multiplied with 100 to get the percentage. And for the SDEB, we get the 19.18%. From the calculation, we can conclude that 19.18% is more than the 75%. Therefore, the chosen reportable segment earlier will remain as the reportable segment, and there is no need to identify additional reportable segment as it's already satisfied the 75% threshold test. From the new segmental report, you guys can see that there are 2 columns which are reportable operating segments and other reportable operating segments. Under the reportable operating segments, 4 reportable segments earlier are reported separately. Meanwhile, for the other reportable operating segments, 2 of the non-reportable segments, which are corporate and others, are reported in 1 column.
The first advantage is the transparency. The segment reporting helps in knowing or revealing which segment gives higher profit or which segment is not. For example, if the segmentation is by group, we can know what group that give higher profit and which group is not. Transparency also means that it can help to avoid any misstatement or error in preparing the financial statement in order to give accurate information to the stakeholder. This is because the stakeholders need the correct information to evaluate our company's performance and management. The second advantage of segment report is it helps to assist the users in evaluating, analyzing, and understand the company's financial statement, as the segment report enables management to monitor for performance and liquidated resources, refine the business and market strategy. For example, the risk for investment in equity of a company that discloses complete information is lower than a company that withholds information. Greater disclosure should therefore bring down the cost of capital for a firm. They also can have a better sense of fluctuation in the company, which can affect their decision making. For example, if a business shows much higher earnings than expected, then the segment reporting will show where those earnings are coming from. The third disadvantage of segmental reporting is the cost of disclosure, because the segmental reporting will raise the company's operational costs. In preparing a segmental report, it will require more costs. because we have to acquire a strong information for decision-making process. The second disadvantage is the basis of segmentation. Every base of segmentation may create segments differently. Thus, this will create a problem to the identification of segmentation. Since the basis has its own limitation, issue, and its own calculation, misinterpretation of the data supplied from the users such as investors or suppliers may happen, and the problem may arise during their decision-making process. Basis of preparing interim report. The unaudited condensed consolidated financial statements for the year ended 31st January 2021 of Sakura Company have been prepared in accordance with three types of standards. The first one is the FAR570 interim financial reporting. The second one is the paragraph 9.22 of the listing requirements of Bursa Malaysia Securities Berhad, BMSB. The third one is the IAS 34 interim financial reporting. These unaudited condensed consolidated financial statements must be read in conjunction with the audited financial statements for the financial year ended 31st January 2020. Two accounting policies that used in preparing interim report. The first one is the MFRS 116, Property, Plant and Equipment, or PPE. For the initial measurement, it will be measured at cost. It will be recognized as an asset only if it is probable that future economic benefits associated with the item will flow to the group and the company, and the cost can be measured reliably. For the subsequent measurement, the computation will be as cost plus accumulated depreciation plus accumulated impairment losses. As for depreciation, freehold land has an unlimited useful life and therefore is not depreciated. For the assets under construction included in property, plant and equipment are not depreciated also because these assets are not yet available for use. As for the other property, plant and equipment, they will be depreciated on a straight line basis. The table shows all the assets with its estimated useful life that will be computed for the depreciation. The second one of the accounting policies that used in preparing interim report is the MFRS 121, which is the effect of changes in foreign exchange rates. The consolidated financial statements is presented in ringgit measure, which is considered as the company's functional currency. For the transactions in currency other than the functional currency, which is recalled as the foreign currencies, will be recognized at their respective functional currency spot rates at the transaction date. Meanwhile, for the non-monetary items that are denominated in foreign currencies, they will be measured at two types. For the historical cost, it will be translated using the exchange rates as at the dates of the initial transactions, while the non-monetary items that measured at fair value, it will be translated using the exchange rates at the date when the fair value was determined. As for translation of foreign operations, for consolidation purposes, all assets and liabilities of foreign operations that have a functional currency than ringgit Malaysia are translated as the exchange rate ruling at the reporting date. Income and expenses are translated at exchange rates at the dates of the transaction. There are 5 types of interim report that have been prepared by the company. The first one is the SOPL, which is the unaudited condensed consolidated statement of profit or loss. The second one is the OCI, which is the unaudited condensed consolidated statement of comprehensive income. The second one is the SOCIE, SOCI, unaudited condensed consolidated statement of changes in equity. The fourth one is the cash flow, unaudited condensed consolidated statement of cash flow. And the last one is the SOFP, the Unaudited Condensed Consolidated Statement of Financial Position. The period for the current and comparative statement prepared by the company. The table shows 5 types of statement. The first one is the Statement of Financial Position. For our current interim report is the 1 February 2020 to 31st January 2021. For the comparative is the 1 February 2019 to 31st January 2020. As for the statement of profit or loss, we have the 2 types of months ending. The first one is the 3 months ending, which is from 1st November 2020 to 31st January 2021 for the current interim report. For the comparative is the 1 November 2009 to 31st January 2020. For the 12 months ending, the current interim report is the 1 February 2020 to 31st January 2021. As the comparative is the 1 February 2019 to 31st January 2020. This date also is the same for statement of other comprehensive income, as they also have 3 months ending and also 12 months ending. As for the statement of cash flow, it only have the 12 months ending, which is for the current interim report. The date will be from 1st February 2020 to 31st January 2021. As for the comparative, it will be 1 February 2019 to 31st January 2020. This date also is the same for the statement of changes in equity SOCI.
Thank you, Ms. Adiba, for the explanation. For the last part of presentation is, we will make 2 adjustments on the 4th quarter by using Statement of Financial Position as at 31st January 2021. As you can see, this is Statement of Financial Position extract for Sapura Energy Berhad before we make adjustment. For first adjustment is depreciation for plant and machinery under property, plant and equipment. On 1st February 2020, Sapura Energy Berhad plant and machinery is costing 758,161,000 with its accumulated depreciation on 1 February 2020 amounting to 601,847,000. The company depreciates all of its plant and machinery using straight line basis at 10% per annum on yearly basis and none in the year of disposal. On 1 May 2020, Sapura Energy Berhad decided to dispose one of its plant and machinery with a carrying amount of 50 million for a profit of 11,875,000. The machine was initially purchased at a cost of 100 million. On 31st October 2020, the company acquired new plant and machinery at a cost of 300 million. After calculated all the adjustment, the carrying amount that we get as per 31st October 2020 is 376,314,000 after deducting the cost of plant and machinery with total accumulated depreciation. Next, moving on to the second adjustment, which is inventory. On 1st February 2020, Sapura Energy Berhad had an opening inventory of 423,251,000. Every year, the price of its inventory will change. On 31st January 2021, the company had inventories of 411,560,000 units at cost per unit of RM1.50, which brings the total of 617,340,000. On 31st January 2021, the net realizable value of the inventories are RM1.25 per unit. The value of inventories on 31st January 2021 should be recognized at its net realizable value, as it is lower compared to cost amounting to 514,450,000. The loss of inventories of 102,890,000 should be recognized in statement of profit or loss. Here is the statement of financial position extract after the adjustment for Sakura Energy Berhad. To prepare the statement of financial position, we are required to record it based on two dates, which are current interim period and comparative. As you can see, this is where we present our previous adjustments that have been made on the non-current asset of plant and machinery and also current asset of inventory. That's all from us for our presentation. Thank you very much for your attention and see you next time.